The S&P 500 daily cloud chart looking 26 bars back and 26 bars forward with lines switched on. And interestingly enough, with lines, this was disqualified back here on the 28th from this bar. And then the other day on the 7th, it became a qualified cancel supply line when it ticked lower than where the line was at 44.31.73. Can't explain it, but there it is. I'm going to have to dig pretty deep to figure that one out. Taking a look at the other supply lines, starting at the top here, this supply line ongoing for Monday will be at 45.28.08. And the supply line ongoing right above the other one for Monday will start the day at 46.04.26. And it has a companion ongoing supply line in the weekly chart at 46.04. And we use the ones in the weekly chart strictly as either support and resistance, and in this case for the supply line in the weekly chart, resistance. And coinciding like that does not happen very often and pretty much on the same trajectory, so it will be following the daily line down by a few cents every day. So that's a strong cap to the upside. And the demand lines, starting with this one, will open at 43.96.89 for Monday the 11th. And it too has a companion ongoing demand line in the weekly chart, about the same trajectory. And the level in the weekly chart is 44.12.71 for starting the week Monday. And that does not happen too often either, like the ones up here for the weekly and daily. So to have both of them like that is quite unusual. So that's really strong resistance up here and really strong support down here. And under this demand line is another demand line which starts the day at 43.39.11. So very slowly on the top supply lines and this bottom supply line, the noose is tightening. I now have lines switched off, and a clip from the big board of support and resistance for the 4400 zone is open. So the baseline 26 bars back concerning this lagging line for Monday will be at 44.89.52. And this conversion line is a little bit underneath it, but pretty close, 44.78. So to the upside, there is a lot of levels to get through to get to this baseline 26 bars back. You can see that level here. So it has to go through R2, R1, the 50 simple moving average, the 35 simple moving average, this daily horizontal line from 10/18/2021, the weekly conversion line, and the daily conversion line, which is also unusual to have both of those pretty close together in the same proximity. Again, more evidence that the noose is tightening. And if it does make it through all those levels and the lagging line makes it above the baseline for Monday, then there's the daily price flip to the sell setup. We'll go back to the sell setup count 1 if it closes above that level, and pretty much right at that level, or 80 cents or so below it, is the top of this gap zone. So that gap zone is right over here. You can see the low is at this bottom over here, and the top at this high, so a little bit of a gap zone, not much, but nonetheless coincides with the price flip. And price closed the aftermarket hours for the S&P 500 on Friday at 44.60. So the gray areas, and that's plus or minus 10 points from the close of the aftermarket, is at the Pitchfork 3, the 21 EMA, and the pivot point. So the closest level to the pivot point to the downside is this daily horizontal line from 0806 2021, 44.45.21. That's been familiar to me for a long time. And the downside has some pretty good support conglomerate going on here. You can see it starts with the baseline, and then the 50 EMA is right there also, and the 20 simple moving average in solid blue. And then under there is the daily Bollinger Band mid-band, which is based on the low price, so a little bit different than the regular Bollinger Band. Adds another level down here. And then not showing is S1 and S2 around that same area on that daily horizontal line from 0806 2021. And the top of the cloud, 26 bars forward, we're looking at here. So on the 19th, the top of the cloud will be at 4497.98, so 44.98. And if price gets stuck in the cloud like this and just goes sideways, then we're getting close to that top of that gap zone at 44.96 at the top of the cloud. And then the top of the cloud keeps descending here. It's in the mid 4400 zone here and goes flat for a few days. And then there's a cloud twist here where the yellow line goes under the green line. It means really nothing. It's just that there'll be a Kumo twist here, or cloud twist, and then the cloud is still very thin for several days after that, and the top of the cloud is flat up there around the middle of the 4400 zone, 4467, and it comes really close together over here on October 9th. And here's the daily cloud chart with everything switched on except lines. We already took a look at that. And you can see that the Stark band upper and lower has started to roll over to the downside. So both upper and lower bands have a downwards trajectory here. So one was either flat and the other one was going up, or vice versa. One was kind of flat and the other one was going up here. So they're both pointed down now, and the lower Stark band is right pretty close to the channel 3 low right there. And as we've just seen, price has to do some pretty serious blasting to get up to the upper Bollinger Band, let alone the Stark band and channel 3 high, which has also rolled over and is quite pronounced, same thing as channel 3 low. So both the Stark bands and channel 3 is rolling over, and the fast QQE has not gone back under the slow QQE yet, which has gone sideways here, this slow QQE, and it kind of planed out on the upper a little, just a slight downwards trajectory, so it still has a chance to just skim off of there and head back up. But if this goes under the slow QQE, then there's pretty big trouble. But I believe that price for the S&P 500 is pretty well in check, and that probably won't happen. That would be my best guess.